can 133 Chinese securities firms compete against one Wall Street bank in China? Ladies and gentlemen, hello and welcome. From April 1st, 2020, foreign brokerages are able to apply for 100% control of their joint ventures with Chinese securities firms. They have been able to apply for majority control since 2018, and already we have seen major players like HSBC, Nomura, Goldman Sachs, Morgan Stanley, UBS and JPMorgan receive approval from authorities for majority control of their Chinese operations, and last Friday, Credit Suisse received approval as well. In the face of this flood of foreign competition, how will Chinese securities companies compete? Chinese regulators themselves are sending mixed messages regarding their faith in the competitiveness of their domestic champions, with the vice chair of CSRC in January 2020 stating that China's entire securities industry of 130 firms would not be able to compete with JPMorgan alone. On the other hand, the People's Bank of China issued a statement 3 days later claiming that they had complete faith in the competitive ability of Chinese firms to handle the influx of foreign competition. So, before going into why Chinese regulators may be uneasy at the ability of their domestic champions to compete against Wall Street's best, what is up for grabs in China's securities market? As things stood at the end of 2019, China's securities industry derived revenues of about 360 billion RMB and had aggregate profit of around 123 billion RMB. The main business lines were securities trading, underwriting, financial consulting, investment consulting, asset management and securities investment, with the securities investment segment accounting for the largest slice of revenue at around 33%. Bloomberg reports that foreign firms accounted for 0.4% of the industry in 2018 and forecasts that share to grow to around 1.7% by 2030. So, if the market share of foreign entities is low and forecast to stay relatively low out to 2030, why are Chinese regulators unsure of the ability of Chinese securities companies to compete against their foreign rivals? In one word, size. Size matters, and the total assets of all of China's 130 plus securities companies amount to around one Goldman Sachs. To remedy this, Chinese regulators are proposing the merging of China's two largest brokers, CITIC Securities and CSC Financial. Were these two entities to merge, the combined operation would have over 1 trillion RMB in assets and a valuation that would surpass that of Goldman Sachs or Morgan Stanley, and create, in the words of Chinese regulators, an aircraft carrier-sized entity. The size of the Chinese market in relation to the number of firms operating in it may also be of concern. With so many domestic securities companies in China, margins are so tight that reports in 2019 stated 5-firm split is 0.001% fee, and the return on equity of China's brokerages is about half that of their Wall Street counterparts. Additionally, a partner at McKinsey estimated that by 2024, 20 large full-service brokerages would be sufficient to service the entire market, with smaller players needing to carve out niche roles in order to compete. So, with consolidation looming large, perhaps some state prodding is needed to kickstart a domestic champion that can truly take on foreign rivals. Only time will tell. Let us know your thoughts in the comments as to whether you think Chinese brokerages can compete with foreign interlopers as they currently stand, or will state-guided consolidation be required? Are there key competitive advantages that Chinese securities firms have against their foreign rivals in their home market, or will they be swept aside by the larger global players? Thank you for watching. We look forward to seeing you next time.